All right, welcome back everybody to another YouTube video. It's been a good run, it has been, but we have more to go. If you've been following this channel, you should be all-time highs. You know that I am. So let's get started. Let's get into this. So for the topics that we're going to cover today, it's going to be about company earnings and how to play earnings season. If you don't know, this week is a massive week for earnings. So if you just check it out right here. Discord's right here. Look. So if we go to, this is my Discord, by the way, it's free to join. It's going to be in the description down below. Here are the earnings plays for this week, the week of October 27th, right? So Monday's already passed. Today's Monday. I'm recording this Monday night. Tuesday, tomorrow before opening, we have SoFi reporting. That's going to be a big one. Some other hard hitters are going to be on Wednesday. We got Meta, we got Microsoft, we got Google, otherwise known as Alphabet. We have Amazon reporting on Thursday after closing, Apple. So we have all of these companies. So if you guys don't know what earnings are, 4 times a year, right, the company's going to report earnings, their quarterly earnings. They tell you how much money they're making. They give you their balance sheet and everything so you can go through it yourself. This is a very important thing in understanding a company and understanding how profitable they are, because it'll, depending on how much money they'll make, it'll give you a certain number of returns that you can try to calculate or predict, right? Anyway, so I'm going to go ahead and get started on some recommendations that I have for you guys. Before we started, how do you invest in an elevated market safely? So if you don't know, I'm going to show you guys right now, but the market is at all-time highs, right? So we're hitting all-time highs every day. And even though our accounts are hitting all-time highs, so is the market. So what does that tell you? It's starting to get scary. It's going to get dangerous pretty soon. But this week, we have Jerome Powell reporting on if he's going to lower interest rates again. And I'll show you guys right here. There is a 98% chance that he ends up lowering interest rates, right? We also have Trump talking to the president of China, Xi Jinping, in, I want to say Turkey. I'm not sure what exactly they're talking, but they're going to talk and they're going to discuss tariffs. So hopefully they can get a good deal going, right? And then what else do we have? We also have earnings season. So all the companies are reporting earnings. They're going to tell you, hey, we're profitable. We've made this much more than we initially thought, right? So anyway, so there's a lot of catalysts for the market to shoot up even higher, even though we're at all-time highs. But it's scary because I'll show you guys here. So this is Meta, otherwise known as Facebook, Instagram, WhatsApp. I think Snapchat, I'm not sure. Anyway, but if you see like the top of the Bollinger Band, they're pretty high. You know, they're like the 750 for Meta right now. Obviously, like long term, we can see Meta at 1,000. So I think if you want to do like a 1 year plus leap, that could be a great idea for Meta. I actually had a leap that I put in my watch list. It's already up $2,000, and I wasn't able to buy it. I was a little bit greedy, and I tried to wait longer. Sometimes you can't be greedy, you know, but in time like this, you have to be smart. So we're seeing all-time highs for Meta. We're seeing AMD. AMD's just a AMD's just a rocket ship. Like, oh my goodness. We're already seeing 260. We're gonna see AMD at 300. I don't know if it'll be the end of the year, but I mean, it's already hitting 260. It was just at like $200. In my last video, I talked about AMD and leaps. Like, wow, it moved so fast. Should have picked up some more, you know. I'm just glad that I already have some leaps, so I got to enjoy some of the move. I mean, look at this. This is craziness. If we look at Amazon, Amazon's also at the top of the Bollinger Band, so we're seeing all-time highs here. The RSI, however, is not at 70. So when we see 70, that means the stock is overbought and it's probably going to see a dip back down, right? If you see, so same way it goes. So 50 is like balanced, like this is a fair price for the stock. If you see 30, it's undersold. So this is a perfect time to buy leaps or to sell cash secured puts if you want the credit, because that means if it goes even lower, you get to pick up the stock at a great price, right? Google, another one that we see at all-time highs. I mean, so it's over the top of the Bollinger Band. But these are great companies for a long-term hold. You know, long-term, we're going to see Google at $300-$400. So if you want to do like a leaps option, which is what I plan on doing once I see a dip, because I feel like it's only imminent now. But they may go up even higher as earnings start to go through this week. So we'll see. Another one is Celsius. Celsius is the energy drink company. I'm sure we all know Celsius. They're starting to expand in Europe, and yeah, I mean, this company, and they are going to grow. They're going to make a lot of money, and they bought Alani recently, which is kind of like a sub like energy drink. I'm not really sure, but that one is really popular with women. Like if you go to Target or anything, or you go to a 7-Eleven, you're going to see Celsius. Now imagine that in Europe too. Like they're going to make a whole lot of money. Anyway, so selling puts on Celsius would be great. This one is for people with smaller accounts. Say like so a $6,000 put, you're putting up $6,200 minus however you get paid over here. Maybe it's like 445 bucks, something like that. But say it's like $5,000 to $6,000. That's gonna return you about 380 to 450 bucks. So I mean that's pretty good in a month. Okay, for this portion of the video, I'm going to show you guys some strategies that I plan on doing on Meta, Google, Amazon, AMD. These are just great strategies. They're going to make you a whole lot of money next year. Not financial advice, but I'll show you guys right now. So the whole idea is to so we're buying a call option, and this call option is going to go basically as far as they let us. So if you want to go ultra safe, you go to 2028 because like this company's just making so much money, their stock is going to go up. So I prefer to go like 2026, 2027. I really like these 2027s because it gives you a whole lot of time. But realistically, like if you look at the price, the thing is Meta is an expensive one. It is pricey, and like wow, this is crazy. Like I wonder so let's look at some watch lists, things that I had. So I'll show you guys on my watch list. On my watch list, I had a 750 call that I didn't buy. It's already up 23%. So you know what I mean? Like these leaps, they move. Can you imagine having 23% of your money? And I put this on what, like last week? I added this 1013, like it is 1027. So 2 weeks ago, and it's already up 23%. Like that's insane. But imagine what it's going to do in the long term. Like, it may seem expensive right now, but in the long term, you may see this at $15,000, $20,000 for one contract. And it's happened to me before, where you go 300, 400% times how much you initially invested, right? So to be honest, like I might wait on this one for a little bit, me personally, but you guys get the idea. You're buying a call option 1 year into the future. Same thing with AMD, it's going to be the same idea. So if go over here, I'm using a Robinhood because they just make it so easy. But again, we're going to buy calls expiring at least a year into the future. So looks like this January 15th, 2027 date is good. Like 310 should be easy. They might clear 300 just this year. And that's looking at about 5,000. Again, it's pretty inflated right now. So take that into account. Like you could get this at 4,000 if you're patient, but it could also go up to like 10,000, because you never know with this market. There's a lot of catalysts. For Amazon, we're just going to it's the same idea really for most of them. You're just buying a long-term call option. You're putting up 5 grand and you get to own the contract. Basically, you get to own shares. I'll show you guys something that's very important before you go and do this though. Or in 44 days. So one thing you have to look at, the more you're going to pay for this contract, the better your delta is going to be. So every dollar that Amazon moves, this contract will give you 50 cents, 49 cents, 49.8 cents, right? So if you pay more, say you want like something already in the money, you're going to be able to get more like bang for your buck because you're getting 67 cents per dollar it moves, right? And say Amazon goes to 300 bucks, like, that's like a big move. So that's almost $7,000. You want 70% of it or do you want half of it? So 45, you got to consider your risk. You got to consider how much you want to put up initially. So cash secured puts is what I talked about for Celsius. I think this company is easily going to go up. So I would want to acquire the shares. Obviously I want to acquire the shares of all of these, but they're more expensive. But Celsius, I can see like going to 100% or going to $100, which would return you like almost 100% of your money back. So I want shares here. So I would honestly not mind going over here and something that's weird delta. And, oh, sorry. So you're looking for a 0.3 delta over here. That looks like safe. But since I want this, like I want this stock over here, I would probably go for this one, right? Get paid 345 bucks on 6,000. So if we look up calculator. 345 divided by 6. So it's like a 6% return in 1 month if you don't get the shares. But even if you get the shares, like you're getting them at 56 bucks, it's like $6 cheaper. And you're almost getting, say it goes to $100 within the next year, that's a double up basically. So yeah, there's this a little bit more, this is a little bit more in depth to the different strategies that I'm planning on playing. Ideally, we would see a dip before you do any of these because you never know, everything is really inflated right now. So just be careful, okay? That's my plan for how I'm gonna take advantage of leaps and easy money stocks that are available. Meta, Amazon, Google, AMD, Celsius. These stocks are gonna make a lot of money and they are gonna go up next year. Like, we gotta understand that interest rates are gonna start dropping, which means that people are gonna have more money. With more money means more investment. There's also like $7.5 trillion on the sideline right now. So we have a lot of money on the sideline still, even though we're seeing all-time highs. So there's a lot of money to be made still. And then, for people who are patient, I'm trying to be patient. It's kind of hard, seeing everything still move up after you try to hold off a little bit. But for the people who are patient and going to be able to wait for a dip, being able to buy leaps on these companies long term is a great way to store your money and make sure that your money is, doubling, tripling, like quadrupling, because that can really happen with these stocks. Okay, anyway, I hope that you guys have gotten something out of this. Make sure to like and subscribe. Join my free Discord. I'll leave it in the description down below, and I'll see you guys in the next one.